You are listening to The Real Estate Ride. Make sure to subscribe and enjoy the show.
Hey, everybody.
Hi, it's Jay and Annie again. And we have an important descriptive video to go over with you today in regards to types of creative financing.
So we've been talking about creative financing, and this whole course is about creative financing. So we figured we better clarify some definitions
Yes.
on the way we do creative financing and what that means exactly. So
there's a few different types of deals that we do with creative financing and why we do them. And we're going to try to give you a basic understanding of all of that, so you know what to expect with those different types of transactions.
And some of you guys may know what these already are, and that's great, and I'm super happy about that. But some of you may be like, what the heck are you even talking about? Because I have no idea what I'm doing. You probably have heard some of these terms in your lifetime, and that's great, but you may have absolutely no idea what they mean, and so we hope to clarify that. So the first one that we use often is a lease option. And I'm sure, like I said, you probably have heard about a lease option purchase before, or a lease option tenant or whatever. And I'm sure you've heard it if you've been going through anything that we've provided for you so far. So a lease option, Jay, does what?
So a lease option is one of the first creative strategies that we used. And so we do a lease option with a seller. So that's a lease, which is basically a rental agreement, and then an option agreement to purchase that property. So what that does is that gives us control of the property. We have the right to lease it, manage it, fix it, and
do anything we want with it, basically.
Yeah. So typically you can profit from those right away. Because normally that type of property is going to be vacant, okay? And we're taking it over from the current seller with an option to purchase. And so that gives us the ability to buy the house in the future. And the terms are flexible. You decide. So one that we did was 10 years because the seller was really upside down on that property. They owed more than what it was worth. Of course, in today's market, that normally doesn't exist.
Right. But again, you can decide what those terms are, but clearly the seller has to agree with you, right? You can't just say, no, these are my terms and this is how it is, and expect them to sign the line, whether they are the same, whether they agree or not. So it is basically a rent to own is the other way to say it. And we do this often. We used to do what was once upon a time called a sandwich lease, but those are no longer legal in the state of Ohio. So we have adapted our paperwork and adapted our way of doing things, and we still use them, and it's still perfectly legal to use them. But I would definitely check with your state and city and town and all of that. Have an attorney on staff, whatever you think.
Yeah. I'm sure people are still doing them, but if you do get caught, you could face the realtor board for selling property you don't own and not having a license. And so that's, that can happen. You'll have to pay a fee or a fine.
But the lease options that we use today are totally legal, totally on the up and up, totally above board, and actually verified and signed off on by an attorney before we do anything.
Yes. In some states, you can still do sandwich leases. In fact, you can market them on the MLS. So you have to check with your local and state laws to see what you're able to do with that type of transaction. We can still do lease options with sellers now and just do a regular rental with the property, or we could turn it into an Airbnb as well. And so we've done both of those options still to this day, because you're not selling the property, you're renting it, or you're offering it as a short-term or a mid-term or long-term stay. Okay.
So it just depends on what your goal is and what your vision is for your business and what works best for the situation. So lease option is one thing that we use. The next thing that we do is land trusts. And again, check with your local real estate board or attorney or whatever you need to do to make sure that you are totally on the up and up, because we do not want you doing things that are illegal.
Never.
Or sketchy or questionable at all. So please be sure that you verify all of this information with your local people. But a land trust is, Jay?
The land trust becomes the new owner of the property. So let's say it's John Smith, owner at 123 Main Street. And so we would typically convert the property from John Smith as the owner to the John Smith 123 Main Street Land Trust.
Yep.
Now the trust owns the property, okay? And the advantage of that is we can keep the owner on there if they still want to be a part owner. We just make them a small percent. And then we have the majority percentage.
We typically do 99% us, 1% owner, so that they still have access to the property if for some reason we default or whatever. It does not revert back to, they're out with the house and we got off scot-free. That's not what we do.
Or you just choose to give it back to them.
Right.
So the land trust is easy to convert ownership with a single piece of paper after it's been recorded. And so that gives you the ability to give it back to them if you want. Or our terms are usually, we're going to keep you owner, Mr. John Smith seller, until we pay that mortgage off that's still on the property.
Right.
And then at that time, it would convert over to us.
And with a land trust, if there is an existing mortgage, then with the seller being part owner of the land trust, it still is technically can stay in his name or her name. And there's really no call of
any loan due.
Yeah.
It
wasn't coming.
Yeah. And then that also allows us to market the property on the MLS, refinance the property, get another loan on the property, sell the property. And so we have total control, and we have the control because we are the trustee. So there's three elements to a land trust. There is the trust itself, who is basically sort of like a private LLC, is a good way to explain it.
Yep.
And then there are the beneficiaries. So we would be the beneficiaries. In Annie's example, 99%, and the seller would be 1%. And then there is the trustee, who then manages, controls, fixes, repairs, mortgages, sells, whatever.
Holds insurance.
Yeah.
All of the things.
Basically manages the whole thing for the beneficiaries on behalf of the trust.
So what we typically do, again, is the 99% for us, 1% for the owner, and then either our LLC is the trustee, or Jay is the trustee, or myself is the trustee. Typically, we try to do one of our LLCs as the trustee so that it's just cleaner and more streamlined.
Yes. And as a third perspective, you could also have an attorney as a trustee, or a real estate agent, or someone like that. And so all of that could be laid out in that trust document agreement.
So that is a land trust. The other more common use is a land contract, and you may or may not have heard of that before you started this program either. So
yes,
a land contract is a little bit different, but Jay?
Land contract, and you may also know it in your state as a contract for deed.
Yep.
Is another term. So the owner would still show up. Sorry for the bouncing around here. The owner would still show up as the owner of record on the auditor's site, but the land contract gets recorded, and that is basically a cloud on the title that says, hey, Jay and Annie's company has a contract to buy this property with these terms and conditions. And that can be any length. It could be a year, 3 years, 30 years. The amounts can be negotiated with the seller, and you put all of that into the land contract.
Yep.
Typically, a local bank especially would refinance a land contract after it's been recorded for 12 months.
Because you, at that point in time, are the owner of record. Sorry, my brain is really bad today. Owner of record, so that you have rights to that property.
Yes, and a hard money lender would give you a loan on it right away as soon as you got it recorded.
Yep.
And so that's a great option for you to be able to buy houses without putting the 20% down. You put it in the land contract, and the equity hopefully you negotiated well, and the 20% equity is already there, and now you're just doing a refinance from that point.
Okay, and then the final creative financing option that we use, I almost said it first, is subject to. And that is a little bit different than any of the rest of them that we've talked about because it's subject to the mortgage that's in place. So
yes, so you would become the owner. You could do a quit claim deed. You could become the owner yourself. You could even still put it in the land contract or the land trust. But subject to term just means it's subject to the current mortgage that is in place on the property. And so you would get all of that information from the seller and know how much the payment is, if it's an adjustable rate or fixed. If it's adjustable, when will it adjust? When is it due? Is there a balloon? A balloon is the loan could be amortized over 30 years, but it's due in 10 years. And so that means there would be a balance due at the end of the 10-year period. Okay. And so there's still a loan on the house for subject to, and you have become the owner and taken it over from the previous seller. Okay.
all right, well, that's a brief overview. We will dive into each one of these more as the course goes on. So we just thought we would reach out and let you know that.
If you have any questions, just communicate with us
Via the Facebook group or email or however else you choose to.
Have an awesome day. Hey everybody, it's Jay.
This is Annie.
We are so grateful for you joining us on our podcast and listening in and participating. We want to offer you this additional free bonus, and that is joining our Facebook group.
Yes, where we will have other individuals, not just us, but having conversations on all things real estate, and we would love to have you join us. So just click the link below and head on over and join our group.
Thanks, guys. We'll see you on the other side.